Union Pacific announced their earnings today, and I wanted to go over what they announced and update my analysis on this stock. This is a stock that I've started to buy recently in the last couple of months. It's taken me a few years to finally find a good time to start investing in Union Pacific. Railroads are a desirable investment by many. Many consider it to be an oligopoly here in the United States because it's really impossible to create new railroad companies. You think about the tracks, you think about the rights to use those tracks and so forth. It's pretty much impossible to compete against these guys. So they have really strong barriers of entry into their marketplaces, which is why I really liked the idea of owning a railroad. But this railroad happens to be really well liked by many investors, and finding a good price has been a little tough, and it's taken some time. But let's take a look at how they announced their earnings for 2024 and how they're guiding for 2025. I'll update my analysis on Union Pacific and let you know what I plan to do with this stock. Starting off with revenues, revenues were relatively flat. They actually went down a tiny bit. And the company believes that they went down a tiny bit because the fuel surcharge that they charge customers was lower. And oil prices were lower in 2024 for the most part. And that's what really drove their revenues down, which isn't really a factor that I would find to be a negative thing for them since they really are passing along the cost of fuel. But everything else looked good. The positive was that they expanded their profitability. Really good to see that even though revenues were relatively flat, they were able to expand their profitability, showing that the company is really well operated. Some positive news is cash. Cash from operations really went up. Very good. And the free cash flow is much higher than I expected. That's really good. And they have been buying back shares. They provide a nice dividend. Overall, the company, from a cash perspective, is really showing that they're a desirable business because they generate cash. They're expanding the cash generation, even though revenues are flat. I believe that Union Pacific is discounted by 31%, which is a nice discount. My valuation of Union Pacific actually went up because the cash flow went up. So when I updated my cash forecast, it really created a higher valuation. They also guided that they should have a good 2025. Nothing spectacular. This isn't a tech stock, but they're expecting to really operate effectively, and I expect that the cash flow is going to do quite well. Having said that, once I look at the present value of those cash flows and I add cash and take away debt, it provides a much higher value of the company versus their market cap. So it provides a nice discount of 40%. Earnings per share is providing a discount of 12% on Union Pacific. So a 31% discount is quite favorable. So let's take a look at what the market and analysts have to say about Union Pacific. First, the market likes what they have seen out of the Union Pacific earnings report, and they will be doing their conference call at 8:45 Eastern today. So that's in about a half an hour. And overall, the analysts believe it's a good company. It's a buy, and it's discounted by about 10%. And they pay a nice dividend at 2.27, forward P of 20. Over the past year, the stock really hasn't performed very well. And over the last 5 years, it's kind of been a steady stock, but for some time, it's kind of lagged. And I really was careful to buy at a time that I thought I was getting a very good price. This is not going to be a high growth company, as mentioned before. So I tried to be careful on this one. The stock is well covered by 20 analysts, and taking a look at their forecast, they believe the company is going to grow nicely in 2025 by about 3.6%, and then 5% in 26, and then 6% in 27. That's good growth for a railroad. They're going to expand their profits by a greater percentage. Looks really good. So those things look really, really solid. As mentioned, I'm probably close to the valuation that analysts are putting at a 10% discount with my earnings per share valuation, but I really use cash flows as the principal valuation method for myself. And I believe the stock is overall discounted at a higher rate. I'm going to continue to buy shares of Union Pacific. I'm glad I started a position in them. This is one stock that I just have to buy consistently. Even on up days, I need to buy shares because that's how I'm going to build a position. It's a really stable stock. The beta is 1.06. And if you have a stock that has a beta of 1, it trades with the market. It's very consistent with the market. We've been in a very long-term bull market. Stocks have been going up. And this one here, I just need to focus on establishing a nice size position, maybe $25,000 invested in the stock and hold it long term. I think I'll be a happy camper if I do that. So that's my analysis on Union Pacific. This is a neat company, and it's fun to follow a company for years and then finally invest in them. And so far, so good. I'm up on the stock. It seems like I picked a good time to buy into the stock, and I'm optimistic that they're going to do well in 25 and the years that follow. That's my video on Union Pacific. Please don't take this as financial advice or a recommendation to buy Union Pacific. I'm sharing my experience with Union Pacific and my analysis. I hope you found it interesting. And let me wish you the best of success in investing in 2025. I hope you make a lot of money.